Everything in this video is not intended as financial or investment advice and is for educational purposes only. I'm Josh Olszewicz, the head of research at Valkyrie. Let's take a look at the midweek market update. As this will likely be the last video of the year, I wanted to highlight some things that I'm hyper-focused on into 2023, throughout 2023, even into 2024 and 2025 at this point, as we're talking about rates and Bitcoin halving, DXY, macro picture. All of this stuff is lining up rather nicely when we're talking about fundamentals, the technicals. And if you are a planner, such as myself, and you're looking at the decision tree, you're seeing branches grow here, there, and everywhere, and you're trying to put this puzzle together, these are some of the data points that I think are important. Now, obviously, in the US and abroad, inflation is a hot topic. Global recession, a hot topic. Earnings recession in the US, a hot topic. Energy will continue to be a hot topic into 2023. But focusing specifically on inflation in the US, if we look at CPI, trueflation, Fed funds rate, and Fed funds rate probabilities, an interesting picture starts to emerge. Trueflation, which is a measure of millions of items in the US on a daily basis, is perhaps more of a true measure of inflation rather than the month-over-month delayed CPI print. Now, we will continue to get CPI prints, but if we look at the trueflation data currently and into January, we are quickly seeing a decline in inflation nearing 5%. It's at 5.77 today. Now, there's no guarantee it'll continue at the current pace. There's no guarantee it'll be below 5% by February. But as CPI starts to meet Fed funds rate, there will be increasing pressure, in my opinion, to slow down on the hikes, which is why I assume we are seeing probabilities peak at around 5%. I think into 2023, we'll have this two-pronged question. If inflation holds above the Fed's 2% target, which it likely will they adjust that target? How long will they hold rates where they're planning on holding rates potentially at a 5% ceiling or above? Will they hold rates that high for longer in the attempt to get CPI below 3%, closer to 2%? All those questions sort of get answered by themselves. If CPI plummets back to around 2%, then we may see some easing on rates. But this is where most people will be hyper-focused into Q1 and Q2 2023. Worst case for risk assets is we have some sort of rise in inflation again, seeing a need for increasing hikes, further hikes, longer hikes. Now, the Fed has already said that that's what they're willing to do if they need to do it. So it'll be no surprise if and when that happens, you see risk assets take a tumble. But as we're starting to see a convergence in rates, probabilities, and inflation, and we're starting to see the potential bottoming of at least digital assets, then the fundamentals and the technicals there align. Just wanted to highlight the trueflation website quickly here. Again, 5.77 declining continuously, matching up pretty well with CPI prints. You can see all of the sectors that they're measuring, very similar to government measurements. This is all sort of ran on Chainlink, which is a data oracle. So very cool. And in the crypto sphere, we're solving problems here in the crypto sphere. And as far as what else I wanted to look at today, mainly technicals, DXY, which again aligns with dollar strength, ECB strength, and or weakness and or relative weakness, right? Mostly the euro in this basket. If we continue to see a decline in the DXY, we should see an uplift effect on risk assets. Now, we've seen a dramatic decline in DXY from the highs, and we have not seen, relatively speaking, a dramatic lift in Bitcoin. Bitcoin looked like it was about to turn the corner, and then FTX fraud was uncovered. It imploded. That certainly didn't help the entirety of our ecosystem. But if the DXY can break back into the previous range between 104 and 90, and on the cloud here, you'll see a shift below the weekly cloud. That's when risk assets have done best on the digital asset side of things. 2017, 2021, 2020. Now, this may align closer to Bitcoin's halving, which is in early 2024, probably around late Q1, early Q2 2024. So again, the timing of this is relatively important if Bitcoin's block reward has a significant effect on price, which it has historically, no guarantee in the future, but a reduction in supply, a programmatic and predictable reduction in supply, has brought bullish headwinds in the past. And if we look at the SPX, another thing that most people are paying attention to here is where is the SPX S&P 500 relative to the 200-day moving average? Again, another sort of bellwether for risk in general. If the S&P can stay or hold above the 200-day moving average for a considerable amount of time, then that may be the all clear signal for risk assets that things are doing well. Now, all these sort of branches of the decision tree are predicated upon Bitcoin being a risk asset, which may change throughout 2023. Thus far, the people that are here have traded it as a risk asset, and therefore it has behaved as a risk asset. If we see growing, budding use cases in payments, in transactions with Lightning, we may see lower volatility going forward, but I think we're quite some time away from that. So in the meantime, I do think we will continue to behave like risk and like a risk asset. And looking at this S&P sort of declining megaphone chart pattern doesn't give me a lot of hope in the near term that we will see anything bullish from the S&P. Certainly as we stand here, trend is bearish. This pattern, which may or may not even be a pattern, but is certainly in the megaphone form, has plenty of room to play around. I've seen and heard targets of 3,000, 3,200, 3,400 from various people. I don't think there's any single analyst that I've heard who's expecting a mega bullish 2023 for the S&P, but that may change if the rates picture changes. Something else to consider for Bitcoin on the supply side of things is and are the Bitcoin treasuries, which you can find here at bitcointreasuries.net. Here's a full list of them. Now, because supply is important, if we continue to see inflows into these or new elements increasing their exposure to Bitcoin, that would be highly bullish for Bitcoin. If we see treasury shrink, Gox coins unlocked, I'd expect those events to be more bearish or on the bearish side of things than supply being purchased, basic supply demand. But my head here is if there's an earnings recession and there's treasury concerns with some of these companies, we may see outflows. Tesla is a prime example of this. If they have issues and need to sell for balance sheet reasons, then there will be an increased supply on the market at that point in time. So something to consider there. From a fundamental side of things, if we look at market cap against coins that have moved and what their price was and what that market cap is, kind of a derivative of a derivative at this point, but MVRV basically shows you the amount of unrealized profit, realized profit, however you want to think of that, in the ecosystem at any given time. How much froth is there in the ecosystem? And at current levels, we're matching all bear market periods. It's basically telling you there's no froth left here. Market cap is actually above realized, which means the last time these coins moved, they were at a higher price than they are now. And you're seeing people sit in losses here, basically. There's, on balance, based on this metric, very few who are in profit on a relative basis, especially compared to previous periods. So into 2023, I would love to see what we've seen in previous ends of bear market periods where we're starting to see a rise or a break above zero, and we start to see more holders in profit on a relative basis based on market cap. So something certainly to continue to watch, but I feel like we are closer to a bottom based on where this is positioned, especially comparative to November 2021, even April 2022, when we hadn't yet zeroed out all of the froth yet. This is a days old open can of soda if we're measuring carbonation. Okay, there's none left. No froth, no foam, nothing. It's just bare bones here on the unrealized profit side of things. For technicals on Bitcoin, another metric that many people have been watching since inception, which was around 2018, between 2018 and 2019, is the Bitcoin Power Law corridor. This is a line of best fit based on the then previous 3 all-time highs. So you can see it came pretty close to, to use a dangerous word, predicting where the high would be in the next cycle. And arguably we may have got there hadn't there been so much rehypothecation in places like FTX. But that's here nor there at this point. The more important thing is we are in essentially the bottom of the predicted zone. And I'm excited to see whether or not this will hold into 2023, much like it did in 2015, 2016, 2017, where we just sort of slowly ground in the maximum of the low period for this indicator. Again, another way of indicating to me that we're certainly closer to a bottom than a top at this point. And if we want to get messy with it and look at duration relative to previous bear market periods, along with drawdowns, we are certainly well within the realm of 2015, 2018, 2019. We're more than halfway through the previous averages, let's say, of time to new all-time high. That's what this is measuring here. Another 9 or 10% down, also within the realm of possibility based on the previous bear market periods. So I don't think either side would surprise me. It certainly leans bearish based on trend metrics, but the other half of me as well. What else is there? What else could go wrong? Maybe Binance, maybe some supply gets unlocked with Bitcoin treasuries. Just to be clear, I think Binance is fine personally. I don't have any insider information there, but those are things that could be problematic for price here. Otherwise, it feels as though most of the leverage was wrung out of the system with Three Arrows, with Celsius, with Anchor, Terra, Luna, FTX. And if we look at where we are again relative to halving, the next halving is around March, April 2024. So we kind of have a year ahead of us to get our stuff together and figure out whether or not we can form a long bottoming period like we had in 2015 and 2019. And then if we look at time after halving to new all-time high, that's around 200 days. And that would be somewhere between October and January 2024, 2025. Bitcoin historically does best in Q4 periods. So we'll see. There's a lot of ifs here. But again, not expecting massively bullish moves 2023. It's really preparing for 2024, being sure we've completely cleared out the system of bad actors and putting our next step forward. On lower time frames, the entire year, if we look at January, this is 2022, the entire year we've been below what's called the Ichimoku cloud. This is slightly adjusted from default, but the important thing here to know is this entire time, it's been very clear, based on this indicator, that we've been bearish. Just as it was very clear in 2020 and 2021 that we were above the whole time. Trend was very strong. Trend here also very strong to the downside. We've sort of exited the high velocity bearish channel. We're still below the 200-day EMA. We're still below the 200-week MA. So there are plenty of levels where what a technical analyst would call confluence is for clarity on bullishness or bearishness. Right now, it's very clear. Trend remains bearish. Bearish to neutral until we are back above the levels we need to be historically. We have been historically to make bullish moves. On top of that, I'd love to see a 200-200 cross here, 200-week, 200-day. The 15 to 200 is something else you can look at on the daily level. But no matter how you try to slice this here, to me the picture remains clear that in the near term, trend is definitely bearish for Bitcoin. But it also remains clear that there are certain levels where that changes. At 20K, 22, 24, ideally into 2023, throughout 2023, we continue to range, continue to base, forming an accumulation zone between 18 to 25. I think my year-end bullish case for BTC would be 30K because that was the previous accumulation breakdown period. So if we can get to 30 by end of 2023, I think that's a huge win. And right now, I think that's a generous target until we get more information throughout 2023. But 30 seems like a great level to try to retest once we regain momentum. For ETH, it's also about supply, and ETH has a burn mechanism. ETH has a strong reduction of supply since switching from proof of work to proof of stake. Currently, nearly 0% is issued per day. And if we look at the difference between proof of work ETH, proof of stake ETH, and BTC, you can see the vast difference here. Now, in a parallel universe, ETH did not move to proof of stake and still is emitting 3.6% annually. Would be very interesting what that chart would look like. I assume significantly more bearish than it is now. So the tokens for staking of the proof of stake component of ETH are locked, are not allowed to come out of that contract directly. The current estimation for unlock of those tokens is somewhere between March and September next year. dependent on the next protocol upgrade, hard fork, when that gets tested and completed. The good news is, from an expectations standpoint, there are checkpoints for testing this protocol upgrade, just as there was from switching from proof of work to proof of stake. So we will know as things are happening. It's not just like overnight, there's going to be this supply unlock. Even after those tokens are unlocked, they basically need to get in line in an orderly fashion so that they're not all unlocked at the same time, because then that would be a security risk for the network. So even after the tokens are unlocked, it's going to take time to unlock a significant percentage of these tokens in ETH. So to make a long story short, there's still plenty of ETH being locked up, staying locked up at the very earliest March 2023. From a technical perspective, ETH doesn't look too much different than Bitcoin. Still below the 200-day, still below the 200-week, still below the weekly cloud. Did have an attempt, a stronger attempt than Bitcoin, to make it through the cloud. Really 3 attempts here in March, in July, and then in November. This is why I like using both the cloud and the 200-day moving average. Really gives you a pretty clear picture of what's going on here. So much like Bitcoin, still bearish, probably more neutral than bearish, but definitely more bearish. Definitely bearish on trend metrics. Would love to see ETH above 1600. Would love to see ETH range even from 1200 to 1800. I think 2500 might be ETH's 30K equivalent, maybe 2000 to 2500 as far as an end of the year 2023 target based on where we sit now. For me, the most important chart in crypto is this ETH BTC chart, because ETH BTC has been ranging here for 600 days or thereabouts. It is above the cloud, has been for 600 days or thereabouts. It has never held this level for this long, and ETH does have an outsized supply issuance reduction relative to Bitcoin. So the fundamentals are there. It's got a time component here. Again, we got BTC having in 2024, ETH unlock between March and September 2023. So it has a little time to make its mind here. But if in 2023 we can see a break above this 0.08 level, I think ETH BTC has a really good chance at challenging the 0.12, 0.15, that range, if we do get a breakout on this pair. Another question for 2023 is, can anything outperform ETH up until that token unlock? This is the DeFi market cap calculated by TradingView. And again, all of DeFi is, on a relative basis at least, there are a few winners certainly out there, but broadly, DeFi has also remained below the cloud, below the 200-day moving average. You could argue falling channel, maybe falling wedge here, which is signaling an attempted reversal in the making, but nothing screaming that says this can't keep going lower. Now, this is against USD. It's not against ETH specifically, but it's going to be hard for most DeFi projects, in my opinion, to outperform ETH in the near term. So on a relative basis to ETH, which is how many people trade DeFi tokens, there may be some opportunities there if we get significant lower lows on those pairs. So we've certainly had an eventful 2022. Here's the 2023. I hope we've eliminated the bad actors and the shenanigans from the ecosystem that we seem to attract. I hope we get sound, common sense regulation in regard to what exchanges can and can't do, in regard to what stablecoins can and can't do. And we emerge as an industry stronger, better, faster than we ever have been, which is what we've done every cycle, anytime anything's happened price-wise or with pillars of the community. That's all for this one. This video is for informational purposes only, and the opinions expressed are not financial or investment advice. All opinions are my own and do not reflect the opinions of Valkyrie Investments and its affiliates. No fiduciary obligation or duty exists or is created between you and Valkyrie Investments or its affiliates, including me, by virtue of any opinions expressed in this video.